Hello and welcome to the CIMA exam preparation series. This is operational case study for February 2015 and this is exam preparation 2. Before you watch this film, it would be a good idea if you watched two other films in the exam preparation series. The first is Taking Case Study Exams, and this is a film for all levels. And watch the first film in the series for Operational Case Study Exam Preparation 1 for February 2015. So let's just recap a couple of things that we talked about in the first film for this operational case study. We said that the operational level covers the implementation of strategy, and its focus is the short term. Each unit in the level E1, P1 and F1, they have their own learning outcomes, and in the first film I took those learning outcomes and I sorted them into, if you like, the highest proportion of that unit. And I suggested that when we come to looking at how we might tackle the case study and the exam, we might concentrate, for example, on the highest number or the largest number of these learning outcomes. We also looked at the case study role, and at the operational level we discovered that the role would be somebody like a finance officer. The audience for that role would be managers and product owners, and the case study focus would be for E1, analysis of the structure, cross-functional communication, P1, a costing or budgeting issue, and F1, preparation of parts or entire financial statements. Well, from the pre-CIMA material for the operational case study, Valley Spring, we can see that the role that you need to play when you're taking the exam is a recently recruited finance trainee. I also suggested in film 1 that you might wish to go back and review your understanding of the verbs that are going to be used at each level. For example, at level 1 you might find the word define, and level 2 you might find the words describe, distinguish, etc. And as you go through each of the pillars, E1, P1 and F1, the most common ones that will appear are discuss, which you can see in level 4, explain, which you can see here in level 2, demonstrate in level 3, and apply, which again is in level 3. There are some other verbs that are used, but it will be very important for you to make sure you understand these, because the tasks that you're going to be asked to do in the exam, almost certainly the first word or two will be one of these verbs. Here are the level 4 and 5 verbs. So now we're ready to do some research and some reviewing of potential question candidates for each of these E1, P1 and F1. We know the scope of what we've got to do. We've read the pre-CIMA material, and what we need to do now is to look at the syllabus and try and identify some potential question candidates, and if they look as if they might be probable ones, we might need to consider what research do we need to do, or what revision do we need to do to make sure we understand. So let's have a look at E1 a little bit more carefully. I've listed the learning outcomes and their codes on the left hand side, and I've tried to identify if these particular learning outcomes appear in the case study. For example, the learning outcome E1A1 talks about the different types of structure that an organization may adopt. And obviously there's a form of organization structure in Valley Springs. So one of the questions will be, what sort of organizational configuration? And we might look at how we might investigate that further in a moment. There doesn't appear to be any sources of corporate governance or regulation or professional behavior. When we look at the finance function, there is a finance function, obviously, because we've got a finance director, we've got some finance staff. You're acting the role as an accounting trainee. We have some financial information, a budget, we have a profit and loss account, and we have a balance sheet. So there is a finance function. But the things that we might want to consider are are there any potential conflicts here where you've got a family member who is much more powerful, one family member who's much more powerful, apparently, in the organization than the other, and it may be an issue that the person who's running the finance department is not qualified. So we might have to look at that area and see if there's something that we need to find out about. There's obviously financial systems in place, and part of your job as accounting trainee will be to operate some of those systems to produce reports and so on. There's no mention in the case study that I can find of IT systems and support. That doesn't mean something won't come up, but I can't find anything in there. The purpose of the operations, well, there's obviously a supply chain, both for purchasing and for distribution, and there's a little bit of discussion about distribution, so it may be that we need to have a look at the supply chain. When we're looking at the learning outcomes for the tools of operation management, the question that came to me was capacity. Is there a capacity bottleneck? Is there some reason why they haven't expanded for the last 8 years? When we look at marketing, one of the interesting areas, and quite a lot of marketing materials provided in the pre-CIMA material, was consumer behavior, how it's changing and how that consumer behavior is affecting maybe the product mix. We perhaps might need to consider in marketing strategies the distribution channels, particularly if the out-of-country marketing eventuates. There's not a great deal about human resources, although there is the fact that there are employees. There's 190 of them, so perhaps employee development might be something that we might need to consider, appraisals and such like. And the ethical code, particularly for you as the trainee accountant, might be an area that we'll need to look at. So what I'm going to do now is I'm going to suggest that, given that these might be some of the issues that we'll look at, let's go and have a look at some of the issues in the material itself, in the syllabus material itself, and see what sort of things we might need to revise or do some research on. So when we look at the learning outcome E1A1, we're looking at discuss the different types of structure that an organization may adopt. And there's 3 parts to this. The purpose of the organization. Well, we know the purpose of Valley Springs. It's a private business. It's for profit. And its mission is presumably to make profits and capital appreciation for its owners. The second part, explain the different structures the organization may adopt. Now that is an area that's potentially one that might arise, because if the business is going to expand, and expansion is possible, the person who's going to take over, the son of the founder, certainly has some plans, and those plans may include expansion, then what sort of an organization might develop? And here we have a dichotomy in a way. What you are as playing a role is a trainee accountant, and yet the core of the learning outcome for E1A2 is this Mitzberg's organizational elements. And so how much would a trainee be expected to know? So there might be some information about this where you might need to add something, but certainly you need to at least know the basics of these 5 organizational elements: the operational core, the strategic apex, and so on. And consider, in this case of Valley, where are they? And where is the dominating force? Where's the organizational element at the moment? It obviously might strike you that there's a strong operating core with quite a limited support staff and quite a limited strategic apex. My next area might be that we might need to consider, there might be some things about culture. And one of the things that struck me when I was reading the case study was the opportunity to expand outside of country A. And if they did that, obviously there's a huge market, and if their product is very good, then they might need to think about not exactly a global organization, but an international organization. And so what sort of things might we consider when we're developing from a small local operation into a wider distribution network? And so we might think of the conditions, the scale of operations, and what sort of an organization might it be. Might it be with an alliance with some other company, for example? Might it be setting up subsidiaries? I don't know, and nor do you, of course, but it might be something you might want to consider. How might this develop? And again, you have to think about it in terms of how much would a trainee accountant be able to contribute to such a discussion. But it's in the syllabus. I think the consideration of a value chain is very important. A value chain from Porter, of course, is very important. There's obviously already a supply chain. There's water, presumably that's from their own land, but they've got supplies of bottles and labels, electricity, and so there's a supply chain. There's their own organization. They've got a large operations function. They've got obviously some inbound logistics and a reasonable size outbound logistics, small marketing and sales, no service, and limited, from what we can see, support activities. There's a distribution network, 2 supermarkets and a retailer, and then there's the end customers. So improving the value chain is perhaps an area that might arise. Also in the operations management area, E1D, there's this concept of capacity. It may be that the capacity of this particular business has reached its maximum. The output for 2014, 2015 seems constant. And perhaps the capacity may need to be increased if they're planning, for example, to increase the marketing to other locations. So one of the things might arise is some discussion about capacity. How do we measure capacity? How do we understand capacity management? How do we work to meet demand? How do we balance? And so it may be that this is an area that you might need to go back and look at and consider. This might be something that would arise. But again, from the point of view of a trainee accountant. However, if you're in a meeting, for example, if your boss knows that you're doing a CIMA level 1, for example, you might be expected to add to a discussion based on the fact that you are learning this material. And so it might be that you would have something to say, not making decisions about it, but giving an input into it, or giving some definitions or some ways of looking at it. So have a look at the things like capacity and think, how might you as a trainee accountant offer some advice in some way? Learning outcome E1 is marketing, and one of the key things that flow through the information that's been provided in the pre-seen material is the change in the consumption of the water that Valley Springs or other people like them produce, that the factors, lifestyle, are influencing the consciousness of people, health, fitness. It's having an influence on consumer buying. And it could be that that may again arise as an area where you might be able to add something. You're a consumer, you're a potential consumer, but you might be able to add something to a discussion about consumer behavior based on the information that you've seen in the pre-seen. E1F is about managing human resources. There doesn't appear to be a great deal of mention in the case study about human resources. Learning outcome 1 is to demonstrate the purpose of the HR function and its relationship with the other parts. And part 2 is to apply the tools and techniques of human resource management. Well, you're an employee and you've been selected, and presumably you've been selected because you have the qualities and skills required to be a trainee accountant. And maybe there's some appraisal that might take place, and maybe you need to explain what sort of training and development requirements you would have as a trainee accountant, and what sort of performance measures might be appropriate to somebody in your position. So you might want to think of it that way. You also want to consider, and this flows all the way through the case study, is that you're going to be expected to apply the fundamental principles of professional behaviour: integrity, objectivity, professional competence and due care, confidentiality, professional behaviour. And there may be things that come up in the additional material that would put you into conflict. And conflict, ethical conflict, where loyalties are divided or some pressure is applied, is a very common thing. And in the organization that you see, where you've got one family member who is quite powerful and has a big part to play in the organization, and one who is less powerful and perhaps less able to stand up for themselves because they're not professionally qualified, it may be there's an opportunity there to exert some pressure on you, and you might be asked to do something that you consider unethical. So it's very important that you understand ethical behavior and that you follow organizational guidelines. So now let's have a look at the question candidates for P1. And again, there are lots of learning outcomes in P1, just as there are in E1 and F1. And the first one is costing methods. Discuss costing methods and their results. P1 1B reads compare and contrast activity-based costing with traditional marginal and absorption costing methods. So I think, as I said in the first film, that's highly possible that you might get some question about that. And so we're going to look at that in a moment in some detail. There is mention in page 3 of the case study that quality is of high importance to them. There's no mention in the case study of environmental costing that I can see. In forecast plans and budgets, there is a 2015 budget which I'm going to go through with you. I built an Excel model and we're going to have a look at that in just a moment. When we're looking at forecasting of results, we might want to review trend analysis, either some trends. Obviously, there's some trends in the demand for product and how that will affect the forecasting of results. We might need to do that. Is there something when we're looking at the budgets that might impact on them, such as a limiting factor? Is the limiting factor the amount of water, for example, that's available, or the capacity of the factory? We looked at that E1. Responsibility accounting, it's not mentioned, but we may have some discussion about who's responsible for parts of the budget we're going to look at. What if analysis? What if we used ABC? What if we changed the product mix? We might look at that. When we're looking at pricing and product decisions, are there any elements of relevant costs or relevant revenues that we need to consider? If we're going to be asked to look at short-term pricing decisions, do we need to go back and understand again the allocation of joint costs? And when we're assessing risk, again, is there a what if that we need to look at? So what I've done is I built an Excel model, and the purpose for me doing this was firstly to make sure I understood and I could test the calculations, the costing calculations in particular, for this 2015 budget for Valley Springs. What I wanted to do then is to play what if. What if I change the volumes of product? What if we reduce the amount of sparkling product and increase the amount of still product, which is what the market is suggesting? What will that do to the profitability or the contribution of the business? And how can we use this model to consider the implications of moving to activity-based costing? So let's have a look at this little Excel model that I produced. So here's the model I produced. It doesn't look very professional, but it will do the job. It's not designed to be presented to anybody at this stage. But what I tried to do was to reproduce and to test the numbers. So we've got two sets of products, still and sparkling. We've got two types of bottle size, and we've got a series of information. We've got the number of batches are being produced. Each batch is 1,000 bottles, and obviously each bottle is 250. So if we look at the quantity of sales in number of bottles, there's B7 times 1000. So this is how many bottles are produced, and if we want to know how much water we've got, we can take the bottles times the bottle size. So I've proved to myself that the revenue is consistent with the case study information, and I've compared it with the 2014 actual. This is the 2015 budget. So again, there's slight increase, but nothing great. I've looked at the product costs, the variable costs. This is variable costs per batch, so 1000 bottles. So we've got bottle, label, and gas costs. And we've got some direct production costs, which are direct labor hours, which I've done in a different tab. And we've got contribution per batch. And we've got some production overheads based on an absorption costing rate. From that, we can calculate the contribution per batch. And again, this ties up that I understand now how it works. So these numbers are exactly the same as the case study. And I've added here a calculation of contribution percent. The production overhead, which we've got from another calculation, which we'll look at in a moment. So the production overhead gives us contribution minus the production overhead gives us the gross profit per batch. And again, I've done the calculations of each of these, reconciled the total profit, gross profit, to the case study material. In separate tabs, I've done the same thing for calculation of labor hours and agree that the calculations are correct. And I've done the same thing for absorption costing to get the absorption rate. So my first task was to prove the calculations, and one of the things that I was interested in was to calculate the amount of water. Remember in film 1 I said in the newspaper article it said 19 million liters of water and $40 million worth of revenue. Well, there's the $40 million worth of revenue, and the calculation of liters is simply number of bottles times the size times 1000 at the end. So 19 million liters of water, I've proved that. So my first step was to prove that the calculations were right and that I understand how the calculation works. And my advice to you is when you're looking at these case studies is to do this for yourself, because maybe the calculations are wrong, but now I understand. So if somebody comes along and says, well, what will happen if we change, for example, the quantity of sparkling water? Let's say we want to reduce the number of batches of sparkling water and increase the number of batches of still water. It's quite easy for me to do that now because I have the mechanism. So let's just do that. Down here we can see the cost of sales. The gross profit is 18,552 and the cost of sales is 22,437. Sales minus cost of sales gives us gross profit. Let's see what happens to the gross profit once we change the product mix. So let's reduce the number of batches of sparkling, and let's reduce the 250 to say 2,900 liters, and let's reduce the sparkling to 9,200 liters. And let's increase the still to 8,700 liters. So I'm keeping the capacity exactly the same. So the capacity is still the same, 18 million liters. But down here you can see that the gross profit has actually fallen from 18,552 to 17,888. So just by changing the volume from sparkling to still is actually going to reduce profits. So maybe now we've got to consider some other things that might be required. So what I'm going to do is just go back to how we were. So let me go back and put these back to 5,800, and we'll put this back to 9,200, and we'll put this back to 5,800, and we'll put this back to 12,100. and just check 18552. So what we can do by having got this model now, we can start playing around what if. We can say, what if we change this? So on the face of it, just moving from sparkling to still is not going to improve things. It's actually going to make things worse. So we need to now do a little bit more investigation. One thing that we might want to do is to consider activity-based costing, because when we look at the production overheads, if we look here, at 10,637. That's the amount of production overheads, and this is allocated on the basis of direct labor hours. So these are direct production costs, but if we divide that by $10 an hour, so the basis of allocating these overheads is on direct labor hours. And yet when we look at the costs, it seems unrealistic to use direct labor hours to allocate these costs, because when we look at the costs here, we've got a huge amount of energy costs here. And obviously, if this is greatly connected with adding sparkle to the sparkling water, and we moved from higher volumes of sparkling water to lower volumes, that obviously will reduce these costs considerably. And we might need to then consider how might we allocate these overheads other than direct labor hours. So that would be a discussion that might arise as part of your exam. So we've got the model there, prove the calculations work, we understand how it works, we can play what if with changing, for example, the volumes of product. We can look if there's a capacity. We don't know that, but if we have a capacity, we might be able to see what's happening if we change the volumes. And we might need to consider the implications of moving to ABC. Now, what we've got to consider also is that you, as the trainee accountant, what contribution could you make to a discussion about product mix and about allocation of production overheads, the basis of it. So I think those two areas you need to have another look at and do some revision about, because it's quite possible that that will be an area for questioning. So you might need to consider taking part in a discussion about the ways in which overheads can be allocated, and you might want to go back to your syllabus notes and think about costing systems generally. What might happen, of course, is there might be an introduction perhaps of some new technology. If the business hasn't changed in 8 years, maybe there's some new technology that might come in. Maybe you need to think about how might we collect information in a different way, or what data needs to be collected so as to be able to implement something like activity-based costing. So what data needs to be reported. So if you want to, for example, look at that energy cost of 6.3 million, how will you determine how much is being used for adding the sparkle, for example? Maybe there needs to be some consideration of what data needs to be collected and how you're going to do it. So that would be an area that I would think you need to perhaps give some serious thought. Again, looking at the learning outcomes in P1, you might also want to go back and do some revision about quality and make sure you understand the difference between, for example, quality control and quality assurance. These definitions are very important. You might also wish to consider or review or revise the cost of quality. Do you really remember, or you're clear about, what is the cost of prevention? What is the cost of appraisal? What is the cost of internal failure or external failure, the non-conformance? So these things are very important for you to be clear. When you're looking at forecasting, again, it's good to have a broad revision about what's good and bad about forecasting. Again, as a junior accountant, you're not going to be able to contribute something except to suggest some better ways or some issues. How do you do it? What ways can you add? How do we do a forecast? How do we What are the issues? What are the factors when we take into account when we're doing forecasting of sales? What are the problems involved with forecasting? So some of these areas might be of important to you. Market research results. There's a lot of information about the market for still and spring water. There's a change in consumer tastes. There's the competition. There's the environment. And what sort of techniques would be around so that you could have a contribution to a discussion. So when we looked at the what if with that Excel model, what we were doing in a way was carrying out a type of sensitivity analysis. But again, you might need to be able to contribute to a discussion, or you might be asked about what are the ways that you could do a sensitivity analysis on, for example, customer demand. So for example, where we looked at that Excel model, how much would energy costs have to come down to enable that change in product mix to increase profits? So maybe that's a type of sensitivity analysis. So how can you look at the case study and look at the sensitivity analysis and put them together and say, how might this work together? What sort of sensitivity analysis might be useful, and how would I, or how could I, as a junior accountant, contribute to that discussion? So now let's have a look at F1. And for me, F1 was the most difficult of these because there's very little, apparently, that the case study talks about. It does have some reference to F1. I mean, there is an incorporated entity. There is a set of financials. They have money. The balance sheet shows that they've got cash. Their working capital position seems okay. They pay tax. They're not international at the moment, but it's possible if they expand beyond a country A, they might be. And there is some question for me about the calculation of tax payable in the accounting system. So let's have a look at the question candidates now for F1. Well, let's begin this review by going back to two of the fundamental principles. Integrity. A professional accountant, and that includes a trainee accountant, should be straightforward and honest in all professional and business relationships. And objectivity. A professional accountant should not allow bias, conflict of interest, or undue influence of others to override professional or business judgments. I'm not saying that's going to happen, but I have a suspicion, put it that way. Let's also have a look at the professional and employment obligations. Accountants should fulfill legal and ethical obligations, including confidentiality. However, accountants may be pressured to act illegally or unethically, including being responsible for misleading information. And when you're preparing and reporting information, particularly of financial statements, information should describe clearly the nature of business transactions, classify and record information in a timely and proper manner, and represent facts accurately. So important considerations right at the outset of this F1. So your syllabus talks about IAS 1, which is the presentation of financial reporting. But when you look at the statement of profit and loss in the case study material, the profit and loss isn't presented in accordance with IAS 1. So IAS 1, perhaps you need to go back and have a look at it, the presentation of financial statements, but the statement of financial performance is presented in the form of statement of profit or loss and other comprehensive income. Now, there is no other comprehensive income in the financial statements that we've seen in the case study pre-seen material. So maybe there's some question here. Maybe your boss who's not qualified might ask you, what should be included in this comprehensive income? What sort of things should be included? We might need to consider IAS 8. And I'm thinking here, as I said in Film 1, The depreciation that's allowed for tax purposes is 25% diminishing balance. And I'd be surprised looking at the accounts whether that is actually being applied. So the question might arise, if we now apply this 25% reducing balance, what would be the effect on the current accounting period and maybe future periods and prior periods? So here we have a change in accounting estimate perhaps. So maybe you need to read up about what IAS 8 says if we change, for example, the useful life of a depreciable asset, or we change the depreciation rate. What happens? In the same way, we need to look at IAS 16, which talks about the annual depreciation charge on a non-current asset based on two factors: the depreciable amount of the asset and the estimated useful life of the asset. So in addition to IAS 8, you might need to look at IAS 16 to get a full picture of how you should do it and what sort of adjustments might be needed in the financial statement. As I said in film 1, looking at the balance sheet, it looks like there's a lot of assets there that haven't been written down, and it's possible, I don't know, but it's possible that some of the assets that are in the balance sheet may be impaired, which means that they're probably not worth the amount that is being carried in the balance sheet. If that were the case, and you were asked, what is the process for writing these down and what effect will it have on the accounts? Well, then you need to be able to refer to IAS 36, impairment of assets, and you need to understand the recoverable amount being the higher of fair value, less cost to sell, or value in use. And you perhaps need to be able to explain that to somebody like your boss who is not qualified and perhaps doesn't really have the benefit of understanding about IAS 36. Another element, F1, is to evaluate the working capital position of an entity. Valley Springs has working capital, it has cash, it has debtors, it has payables, it has inventory. And it may be that there's some question about the working capital cycle. How do we calculate it? What's involved in it? If we lengthen it and shorten it, what will happen? So perhaps that's an area that you might need to revise. You might be asked to consider or give your advice about what the business, Valley Springs, should do with the cash that's in the balance sheet. What sort of investments would they consider? And maybe you've got to then consider liquidity. When is the money going to be needed? Security, safety. How could surplus funds be deposited? What would be the most beneficial for the company? So that whole area, they've got quite a bit of money on deposit or in their balance sheet. How would you suggest that they use it wisely or invest it wisely? And maybe in the same way, you need to give some advice to your boss about the risk of various investments. And maybe you've got to go through. If you want risk-free, then government securities, and so on. So the risk and return of short-term investments might be something that you might be asked to give your opinion about. The last part is of E1 is taxation, fundamentals of business taxation, and one of the basic things that all businesses have to do, and an accounting trainee may get involved in this, is record keeping, retention, and substantiation. So maybe there's some requirement or maybe there's some discussion that you might be able to contribute to about what sort of record keeping, what sort of substantiation might be needed for tax record. If Valley Spring, for example, consider selling product in countries outside of country A, one of the questions might arise, well, how will they do it? Will they set up a subsidiary? Will they do a joint venture? Will they have an associate? And one of the questions that flow on from that is about taxation, international. And you may be asked, for example, to explain corporate residence. Maybe tax in the country that Valley Springs wants to operate might be a high tax or jurisdiction, might be a low tax jurisdiction. So you might get asked about corporate residence, and that it will involve, for example, domicile, establishment, effective management. You might also get asked about double taxation agreements. How does that work? So again, from a junior accountant point of view, these are things that maybe you would be expected to have some knowledge about, if not to be able to give definitive advice. Another thing you might be asked to review is the reconciliation of accounting profit to taxable profit. And this is a very popular subject, very useful to understand. And in this case, we've talked about depreciation, for example. The accounting depreciation is given in the budget for 2015 and for 2014. So the accounting profit needs to add back the accounting depreciation and then deduct the tax allowable depreciation, which if the depreciation rate of 25% is allowable, maybe the tax depreciation may be higher. And if that's the case, there may be some deferred taxation issues that you may need to explain, particularly to your boss. You've got a tax benefit that maybe you've taken early and you might have a liability in the future. So you need to consider this. If your accounting depreciation is lower than your tax allowable depreciation, what is the effect really on the profit loss account of Valley Spring? I think that's all I want to talk about in terms of that sort of revision. There's plenty for you to look at. What I want to do now is to talk about doing the reports or the emails or writing solutions in an exam. We're told that there isn't going to be a need to do big calculations. You won't have to do Excel models or anything like that. You may be presented with some calculations and be asked to interpret them. And so what I want to do now is just go and have a little talk about writing reports and writing emails. So what we might want to do here now is think about, if we have to write a report, how would we do that? What sort of format would it be? If we had to write an email, what sort of format might it be? Because, and I'm taking this from T4, which was a CIMA exam from last year, and the material, don't worry about the word unseen, the material says, prepare a report that prioritized, analyzed and evaluated the issues facing a company and make appropriate recommendations. So what you need to do is to actually read this very carefully before you start writing. So prepare, go back to the verbs. What does prepare mean? A report, prioritized, analyzed, and make appropriate recommendations. So one thing you might want to do is might want to practice or consider, if you don't do it as a matter of course in your business life, is what might a component of a business report be? Well, reports are short statements. They're not long essays, they're short statements. They're getting to the point. Reports get to the point. They're listed. You can have bullet points. There's nothing wrong with that. Bullet points may be with expanded descriptions, if you like. Maybe with headings to draw attention. Don't make too many underlines or highlights. If you want to emphasize something, don't write big letters and underlines lots of times. Less is better. If you can draw something or a diagram or something like that, something visual, it's very difficult in the exam that you've got, so that's maybe not possible. Be careful about giving your own point of view. If you're giving an opinion, say, this is my opinion. Separate fact from opinion. And if you're being asked to give recommendations, list the recommendations and perhaps identify the action that's required and maybe who needs to do it. So when you're writing reports, particularly in the time that you've got, briefness, being brief is important. Being to the point is important, and doing what is asked is important. Okay, make sure you don't go off and think about doing something you think's there. Do exactly what you're asked. So here's something from a CIMA marking guide, from a CIMA examiner, about emails. And their suggested approach is candidates should consider carefully the actual requirement, the purpose of the communication, for whom it is intended, and the salient points that he or she wishes to communicate. This means that the candidate needs to think carefully about the major points which need to be included in the communication. Thought also needs to go into the effectiveness of the communication, which means it should have clarity, be to the point, and not be ambiguous or verbose. Verbose means too many words. Candidates should follow the instructions. As an example, here's something from a previous exam. You're required to email to board members on the differences between profit and cash. That's one thing. And the significance of cash flows in the particular industry and the merits of a particular proposal. Let's just deal with the first one first. So you're asked to do two things. So the first thing we want to do is to address it correctly. So it's the board members. So the board members, XY, XJ company, board members. Who is it from? Management accountant. Well, you just need to say trainee accountant. That's your position. And the date is today's date, or the date you do it, unless there's something in the unseen material that suggests otherwise. And maybe just a little header to say differences between profit and cash. Doesn't need to be a long essay, and use numbers or bullets and just explain simply. Don't go into long sentences. It's not an essay. It's an email providing information. So no highlights, simple, brief, to the point. Another issue, little title, and continue the numbering. It needs to be like that, clear, concise, brief, to the point, understandable. So let's summarize. You are a trainee accountant. This is your role in this particular case study. Your audience is likely to be manager and product owners, but it could well be the manager of this product area is also the owner of the business, and your direct supervisor is not only the finance director, but also a shareholder. So you need to be careful when you're doing a report or an email that you get your address right. Don't say hi, don't say sir or madam. If you're going to address somebody, either in Australia, you'd probably use their first name. Hello John, hello Mary, or hello Mr. Brown, if you feel more comfortable with that. But no sir, no esteemed sir, no, nothing like that. What we've looked at is some of the things that you might have to do. Structure of the organization, cross-functional communication. It could well be that the production manager is going to ask you as the trainee accountant to do something which may conflict with your direct report, perhaps. Maybe the organization is going to grow. How will it grow? What's the strengths and weakness? We've looked at potential costing or budgeting issues. We've got a product mix issue. We've got a potential wrong overhead allocation method. We've got a potential for activity-based costing, and so on. This one is a bit more difficult, financial statements, but we've got possibly the impairment of assets. We've got the restatement of depreciation. We've got the profit, accounting profit to tax profit, and the comprehensive income. So there's a few possibilities here that might arise. The questions, these are the questions from the CIMA tutorial. And you can see again, as I said in a previous film, these are very open questions. They're not calculate the answer. It's not a one answer. You're going to be asked to do something. Describe the impact of the announcement on X's share price. Write an email to somebody on the current strategy. Prepare your notes. Now this one is very, very open-ended. What does it mean, prepare your notes? Well, if you were going to a meeting, what sort of things would you have? What sort of things would you think this meeting's going to bring up? For example, if you're going to a meeting about the budget, is the budget a good way of doing it? Well, then you might also want to consider activity-based costing, overhead absorption rate, and so on. So you make some notes about that. Respond to somebody on the recent press reports. So these are open-ended questions. You're at the operational level. You're talking about implementation of strategy, and your focus is short-term. I don't think you're going to be asked to do any long-term planning, big decisions. You're going to be asked to comment on perhaps somebody else's idea, or say, is this calculation correct, or is this process how we should go about it, or tell me how we should do this. So you need to be very clear. Don't try and be somebody who is not a trainee accountant. You've got to know your place in that way, and you need to write your reports from that point of view. Okay, I think that's all from me. I wish you luck in your exam, and it's been a pleasure to make this film for you. So bye-bye for now.